Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today, and if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She's a personal financial advisor. You can contact her with the email honggiannguyễn@vcsc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trường Linh Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today we're going to share with you about the Vietnam Strategy 2023. Let's continue with the industrial manufacturers, all businesses that promise near-term recovery. Let's see on the screen, and I will share you guys about their sales volume. We expect a recovery from PTB, GDT, and SDK, and continuing resilience from DGC, DHC, and TLG in 2023. VCSE sales volume forecast for industrial manufacturers. DHC, a recovery in packaging sales to local exporters and paper exports to China to be nearly offset by weaker domestic demand. We believe the HC sale volume will continue to be resilient to weaker demand in early 2023, when we expect China's demand will not yet have recovered, thanks to its cost leader advantage. STK, backed by an ease in destocking activities and strong order relocation from China that has been signaled by key brand customers. We expect orders for yarn and upstream material to recover earlier compared to apparel and furniture. In addition, we expect customer orders to recover in Q1 2023 and sales volume to recover in Q2 2023. GDT, backed by an ease in destocking activity, GDT's product cutting boards have relatively small ticket size that could have spending on them to recover. But for wooden furniture, PTB, we expect PTB sales volume to begin to recover relatively late mid-2023 due to one, the sluggish US and Vietnam property markets, and two, the big ticket size of furniture and stone products that make them more discretionary for customers. DGC, we expect sales volume to remain resilient at full capacity utilization based on DGC's track record as a cost leader. TLG, despite weakening in overall consumer spending in Vietnam, we believe TLG's revenue will be relatively resilient thanks to the defensive nature of school supply demand. Since 2008, TLG's revenue has only recorded a year-of-year decline in 2020 and 2021, when COVID school closures affected sales to students. DHC's aggregate solid paper and cotton box paper content. Price spreads, commodity price trends to benefit DHC and remain TLG's margins. DHC's input OCC and packaging paper price spread was depressed, but it is bouncing back strongly. while OCC prices slumped 50% from 280 US dollar ton to 140 US dollar per ton in 2022 amid weak global demand. Paper prices have retreated 20% from 12,500 Vietnam dong per kilograms to 10,000 Vietnam dong per kilogram in Vietnam and are cushioned by resilient demand from domestic consumption. However, the HC's price spread compressed in 9 months 2022 due to its high cost OCC inventory. Management expects the HC's OCC cost to decline going forward. In addition, the reopening of China should cause paper demand to recover and boost paper and OCC prices. This situation would help to expand the HC's price spread further in the near term while it still enjoys low-cost OCC inventory. Our estimate of the HC's quarterly paper ASP and units gross profits. Southeast Asia's import OCC prices and China's medium paper prices. DGC's industrial phosphorus chemicals Vietnam dong price spread has compressed 9% since Q3 2022. We attribute the drop in yellow phosphorus price despite the continuing supply shortage to one, weakened demand from the electronics sector, to the strong depreciation of the CNY compared to the US dollar, and three, lower input coke prices. Our 2023 forwards phosphorus ASP is 15% lower than the current market price. The average Chinese phosphorus producer breaks even at our 2023 forwards. Phosphorus ASP compares to an EBIT margin of 20% of the current price based on our estimate. We believe phosphorus prices will not revert to the pre-COVID level in short term because China no longer allows preferential electricity prices to phosphorus manufacturers, while capacity expansion is being delayed and discouraged to protect natural resources and the environment. GDC's agricultural phosphates WPA price spread finally subsidized from its record high during Q4 2022. Wet phosphoric acids price in India slumped from 860 US dollar per ton to 575 US dollar per ton. 20% phosphoric content, which is due to a strong compression in inputs, sulfur costs and weakened demand amidst prolonged high prices. In our view, phosphate prices in 2023 can be cushioned by one, China's limitations on phosphates exports, and two, solvent extract technology that allows electric vehicle batteries to use WPA as an input instead of thermal phosphoric acids, the derivative of phosphorus. Price spread between yellow phosphorus and key inputs. price spreads between WAPA and key inputs. TLG's input plastic price GPM to remain high as input plastic prices cooled after rally. In H1 2022, TLG benefited from low-cost input plastic inventory that was accumulated in 2021. Because input plastic prices rose 25% in H1 2022 and have dropped 40% since May 2022, we forecast nearly flat 2023 forward GPM 43.9% compared to 2022 forwards 44.2%. TLG's main input plastic prices and oil prices. Downside risk to our outlook. Weaker than expected global demand. This situation could happen in both developed markets and Vietnam and could be due zero COVID measures prolonging in China, stronger than expected changes in commodity prices that would dampen price spreads of DHC, DGC, and or TLG. For DGC, while fertilizer demand has weakened due to prolonged record high fertilizer prices, the sector is vulnerable to geopolitical conflicts. Russia and China are large phosphate producers and tighten monetary policies that could dampen phosphate prices. Additionally, the Vietnamese government could limit exports of fertilizer to ensure the domestic supply, thereby reining in domestic fertilizer prices. Moreover, if Vietnam's retail electricity prices rise stronger than we expect, DGC's earnings could be slightly dented. For DHC, weaker than expected paper demand from Vietnam's domestic consumption and or the export sector could weigh on paper prices, slowing the recovery of price spreads compared to our expectation. For TLG, high oil prices and input plastic prices could be difficult to pass on to consumers given weakened consumer spending and high inflationary pressure in Vietnam in 2023. Strong inflation and fluctuation of the Vietnam zone that could lead to large foreign exchange losses or dampen export competitiveness. In case of strong depreciation, STK and DHC could continue to be hurt due to their respective imports of inputs, PET plastic chips, and OCC, as well as their foreign exchange denominated debt. Meanwhile, if the Vietnam zone gains too much strength compared to the CNY, natural resource exporters like DGC, GDT, and or PTB could be impacted as their input materials worked with Vietnam zone. Stock picks for 2023. Đông Hải Bến Tre, DHC. DHC is more player, but a cost leader in Vietnam's packaging paper industry, which was growing 10% PA on average thanks to the country's robust retail sales and export center. DHC's proven cost average comes from its capability to time and execute low-cost capacity expansion as well as its employment of local experts, which differ from its competitors. In the short term, we expect the HC's price spread to bounce back strongly and its sales volume to remain resilient due to its status as a coach leader. The HCs also benefits from a potential recovery in China's demand and its foreign exchange losses. The HC's foreign exchange losses should ease given our house forecast for a less significant Vietnam dong depreciation in 2023 compared to 2022, in turn bolstering an earnings recovery. In the medium term, we forecast a 15% EPS CAGR in 2022 forwards to 2025 forwards, thanks to increased revenue from carton boxes. In addition, the realization of the HC's plan for its new Zalong 3 paper factory that could more than double its total paper capacity is a major upside catalyst to the HC's long-term growth outlook and share price. Our current forecasts for DHCs have not incorporated Zalong 3 as we await clearer details on its plan. DHC's 2023 forward, 2024 forwards PE of 6.3% at 6.3 times, 5.2 times looks attractive compared to a 10 years peer median TTM PE of 11 times. Please find more details on DHC in our latest update report. Century Synthetic Fiber STK. STK is one of Vietnam's two producers of medium and high-end polyester filament yarn. The accelerating shift of global brands towards recycled yarn consumption bodes well for a established incumbent player like STK, which is well embedded in the supply chains of global brands. In 2023, the company benefits from its destocking activities and foreign exchange losses. We believe STK's yarn will recover relatively early as an upstream material for apparel. We forecast a 25% EPS CAGR in 2022 forward to 2025 forwards that is backed by one, sales volume rebounding in 2023. Two, the first phase of STK's United project and a yarn fabric garment alien project coming online in 2024, which is set to expand STK's production capacity by 70%. And three, a continuing sales mix shift toward high margin recycled yarn. STK's 2023 forward, 2024 forward PE look attractive at 7 times, 5.8 times compared to its 5-year average of 9 months of 9 times. Duxan Chemicals. DGC is a global leading exporters of yellow phosphorus with at least 30% of global export share. The company leverages Vietnam's red phosphorus reverse and its proven R&D capabilities. The latter of it has culminated in global top-tier phosphorus quality and cost effectiveness. While we expect DGC's earnings to decline in 2023 year-over-year due to corrections in commodity prices, The company valuation looks undemanding with 2023 forward, 2024 forward PE of only 4.8 times, 5.9 times. Please find more details on DGCs in our latest update report. DGC, VHC, GDT, STK, PTV, TLG, appendix company names and codes. Yeah, and that brings me to the end of my presentation today about the industrial manufacturers. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can assist you. Like, subscribe our channel and share this video to everyone to know more about our channel. So thank you for your listening and see you next time. Have a nice day.